But unfortunately, there are people out there, and I'm going to get on somebody's case here for a minute. I'm going to talk about Peter Schiff. Now, I know that I'm stepping into the lion's den here because many of you who are libertarians, who are gold bugs, who are doom and gloomers, think that Peter Schiff is nothing short than a deity. But here's the problem with Schiff. Every time that the market hits a retracement, every time we start to see a pullback, Schiff runs out to the microphone and talks about how he's been right the whole time.
Peter Schiff, an expert on the economy, he forecast the financial crisis of 2008.
How much money did you make predicting the 2008 for your customers?
Well, my customers lost in 2008, right?
Now, here's the issue that I take with it. It's not that he's wrong in terms of economically what's broken in the economy. He's correctly identified that there are massive systemic problems in the amount of debt that we're acquiring, in the quantitative easing. But once again, what have I been talking about on this show? Very, very easy to identify a problem. Very difficult to understand and accurately be able to predict what the appropriate solution should be. So his whole shtick the entire time has been buy gold, buy gold, buy gold. Stay out of the market. The market's bad. The market's terrible. It's going to implode. The whole system's going to melt down. And wouldn't you know it, once every 7 to 10 years, he ends up being right.
Frank Curzio, this is what it should be. I mean, some guy compared me to Peter Schiff. Please, do not ever compare me to that guy. In a previous email, ever compare me to Peter Schiff? I mean, it's not about being wrong, you know. And I'm gonna be honest here, okay? I'm gonna go on a little bit of rant. Perma bulls and perma bears, right? If you don't know what that is, those are people who are bullish or bearish no matter what, right? They were born this way, right? They didn't say mommy and daddy's. Gold was their first gold. That was their first word as a baby. No matter what happens, what the Fed does, what backstops they're giving to the banks, no matter what, they're just one. Those guys will destroy you. They will destroy your portfolio. And I've had guys come on here who are like that. And it's fine. Because again, doing everything myself now, old business, I don't care. This is about you. I don't care who I offend. I'm just telling you, these people will destroy your portfolio. And for this guy, it's not just the fact that he's calling for deflation for such a long time. I've been calling for deflation for 3 months. This guy's been calling inflation for 10 years, right? He's been so wrong in one of the biggest bull markets ever, which is fine. Again, that's not my problem. My problem is that I know that this guy is still making a fortune with his books and everything else that he does. Well, everybody that listens to him gets crushed. And it's a disgrace that the media continues to put this guy on television. Why? Because he gets page views. When he's still doing the same exact thing over 7 to 8 years, and he's been so wrong. And yet he's able to make money. And the reason why I know, because people have sent me emails that Schiff was managing their money. And they were following him down hundreds of thousands of dollars. That's what bothers me. That's what bothers me. Because I do this for the investor, for the individual. And when I see someone taking advantage of that, and he's able to make money, everyone's listening, losing hundreds of thousands of dollars, that really, really pisses me off. So you have to be careful when you just listen to guys like that. And I'm not going to name them here and pick on them. Just guys that no matter what happens, they have the same mentality. No matter, I'm telling you, I've dealt with so many of these people in my life, and they will crush your portfolio. You have to be flexible. There's times to be bullish and times to be bearish. Yes, I see deflation. I basically made a call 3 months ago, and it looks like we're heading that way. This was before Brexit, but we've seen economic data turn negative here, which isn't good in the U.S. But here's a guy who's been calling for 7, 8 years. You can compare me to anybody, just don't compare me to that guy, because I really, you know how I feel. Anyway, sorry about the rant.
But at the time of his prediction, the dollar index was sitting at around 80. So he was calling for a 50% decline in the value of the dollar. If you look at the dollar today relative to every major currency, the dollar is much stronger than it was when he made this prediction. You are seeing deflation in the terms of the exchange rate of the dollar relative to other currencies. Now, we've seen some modest inflation inside of like consumer prices and things like that, but it's nowhere near what he was predicting in terms of a dollar index collapse. When he was talking about this, gold was trading at $1,800 an ounce, and the stock market was trading around 13,400. Now, I want to show you a chart of gold. Now, if you're not listening to this on the live or watching this live, then you're just going to have to understand, believe me, when I say, when I explain to you what the chart is showing. But blow that up full screen, Darren. That little point where I have highlighted, I've got a big circle around it and arrows drawn to it. That was September of 2012. Gold was trading at roughly $1,800 an ounce. And Peter Schiff is out on CNBC talking about how gold is going higher, the dollar's going to collapse, and he managed to come out and say that right before gold dropped from $1,800 an ounce to $1,100 an ounce. A 40% correction. He continues to go out and spew this prognostication to anyone who will listen anytime he can find an angle. Now listen, folks. Some of you would say, well, you know, you can't be right all the time, and certainly eventually he's going to be right. But folks, you can't use that to invest with. You've got to actually understand what causes inflation.
You know, Rick, you produced a document a number of years back called 9 Nosy Questions to ask the management of a company. But if I can ask you, are there a couple questions, Rick, that you would advise someone to ask their financial advisor? Because you said a moment ago, someone who has the willingness to do the work. If they're entrusting someone else, what questions might you suggest that they ask that person?
That's a great set of questions, Tekoa. And I would ask an investor to ask his advisor, first of all, why you? There's hundreds of thousands of people who are willing to take a commission in order to tell me what I do with my money. And the answer better include a specific focus on whatever the investor is interested in. If the investor is interested in financial services stocks, then that investor's advisor better know something about financial services stocks. And the institution that he or she works for had better know something about financial services stocks. The idea that in an investment climate that is as diffuse as it is today, with 70,000 publicly traded instruments worldwide, that any institution, let alone any individual, has expertise across the length and breadth of the market is fiction. If your advisor doesn't have specific expertise with regards to the topic that you are asking him or her to address, fire him or her. The second thing is that you need to ask your advisor to describe in specific terms the market conditions that he or she inhabit, what circumstances they believe drive the market, and what the correct strategic responses for an investor are in the context of the specific market that the advisor is advising on. If the advisor can't give a good response to that, fire the advisor. The third thing is you need to ask the advisor, what specific support do you get from your institution that makes you competitive in my market? If you look at Sprott as an example, this is a commercial, thank you for the opportunity, we are probably the world's largest investor in microcap natural resource equities. We have the ability to address these issuers as equity investors, as debt investors, but our size and scale means that we carry on more conversations than any of our competitors, and we are able to focus more evaluative resources, that is, geologists, geophysicists, and engineers, than any of our competitors. Our strategic advantage is simply that we are a $10 billion institution in terms of assets under management and assets under administration that's solely focused on natural resources and almost solely focused on microcap natural resources. If somebody came to Sprott and asked us, should I buy 1,000 shares of GE, they shouldn't listen to our response because we have no time, experience, and attention in GE. But if somebody comes and asks us a question about small cap or micro cap oil and gas or mining shares, we are probably better prepared than any competitor in the world on a global basis to answer that question. And that's the nature of the discourse that needs to take place between a customer and an advisor, irrespective of the sector that the customer intends to invest or speculate in.